And in 2018, the 25 richest Americans paid a true tax rate of 3.4%. You probably paid more than that on your last paycheck. This isn't a glitch in the system. It's the system working exactly as designed. I'm going to show you the exact playbook billionaires use to legally pay almost nothing in taxes. Step by step, with real numbers. And by the end, you'll understand why this will never change, unless you understand how it works. Let's start with what they taught you. The U.S. tax system is progressive. Earn more, pay more. Sounds fair. Here are the brackets. Earn up to $11,000, you pay 10%. Earn $44,000 to $95,000, you pay 22%. Earn over $578,000, you pay 37%. The top rate. The more you make, the more you give back. Except there's a catch. A big one. These brackets only apply to one type of income. Earned income, wages, a salary, money you trade your time for. The money a teacher makes, a nurse, a plumber, a software engineer. Every dollar you earn at a job goes through these brackets. And the government takes its cut before you even see the money. It's called withholding, automatic, unavoidable. But billionaires don't earn wages. They build wealth. And wealth is taxed by a completely different set of rules. Rules you've never been taught. Rules that were written specifically for people who already have money. And those rules have one very simple principle. If you never sell, you never pay. In 2021, something unprecedented happened. ProPublica, an investigative journalism outlet, obtained thousands of leaked IRS tax records, real filings, real numbers, from real billionaires. For the first time in history, the public could see what the richest Americans actually pay in taxes. Not what they should pay, not what the brackets say they owe. What they actually verifiably paid. And the numbers are staggering. Warren Buffett. Between 2014 and 2018, his wealth grew by $24.3 billion. He paid $23.7 million in taxes. His true tax rate? 0.10%. 0.10. Jeff Bezos. His wealth grew by $99 billion in the same period. He paid $973 million. True tax rate? 0.98%. Under 1%. Elon Musk. Wealth grew $13.9 billion. Paid $455 million. True rate 3.27%. Michael Bloomberg, 1.30%. George Soros, 0.05%. Now let's compare that to you. The average American household earning $70,000 a year pays an effective federal tax rate of roughly 22%. 22%. A teacher in Ohio pays 22%. A firefighter in Texas pays 22%. A single mom working 2 jobs in Michigan pays 22%. And Warren Buffett, the 6th richest person alive, pays 0.1%. Let that sink in. You work 40 hours a week. You pay your taxes automatically every paycheck. No choice, no strategy, no loophole. It's taken from you before you can even touch it. And the people with more money than entire countries? They pay less than you. Not a little less. 200 times less. And here's the part that should make you angry. None of this is illegal. They didn't cheat. They didn't hide money in offshore accounts. They used the tax code. The same tax code that was written, revised, and protected by the people it benefits. So how do they do it? 3 words. Buy, borrow, die. This is the playbook. And once you see it, you can't unsee it. Step 1. Buy. You buy assets, stocks, real estate, companies. These assets go up in value over time. Elon buys Tesla shares at $1. They grow to $200. On paper, he just made a fortune, 200 times his money. But here's the trick. He doesn't sell. He never sells. As long as he doesn't sell, the profit is unrealized. It exists on paper only. And the IRS cannot tax unrealized gains. There's no mechanism for it. No law that says you owe taxes on money you haven't technically received. So his wealth grows by $10 billion, $20 billion, $50 billion. And his tax bill on that growth? 0. Step 2. Borrow. Now you're sitting on billions in assets, but you need actual cash to live, to buy a house, a jet, a vineyard in Napa Valley. Normal people sell their assets and pay capital gains tax, 20%. But billionaires don't sell. Selling would trigger a taxable event. Instead, they do something elegant. They walk into a bank. They say, I have $100 billion in Tesla stock. I'd like a loan for $1 billion. The bank says yes immediately. Why wouldn't they? The collateral is massive. The interest rate, 2, maybe 3%. Practically free money. And here's the key that makes the whole system work. A loan is not income. The IRS does not tax loans, because technically you have to pay it back. So you just received $1 billion in spendable cash, and your tax bill is 0. And it gets better. The interest you pay on that loan? Tax deductible. You can write it off against whatever small income you do report. The system literally pays you to borrow instead of sell. Step 3. Die. And this is where it goes from clever to obscene. When a billionaire dies, their heirs inherit all those stocks, all that real estate, all those decades of unrealized gains. And under current law, something called the stepped-up basis kicks in. The cost basis of every asset resets to the market value at the time of death, meaning all those gains? Erased from the tax record. The IRS treats it as if the heirs bought those stocks at today's price. Decades of growth, billions of dollars in appreciation. Never taxed. Not when they were earned, not when they were borrowed against, not when they were passed down. The wealth transferred. The tax bill? Vanished. And then the heirs start the cycle again. They hold, they borrow, they pass it on. Generation after generation. Wealth growing. Taxes never paid. Buy, borrow, die. 3 steps, trillions in wealth. 0 in taxes. And if you think this is just a theory, consider this. In 2007, Jeff Bezos was already worth billions. That year, he reported so little taxable income that he claimed and received a $4,000 tax credit for his children. A tax credit designed for middle-class families. The richest man in the world collected a benefit meant for parents struggling to pay for daycare. That's not a loophole. That's the system performing exactly as built. Now let's talk about what this costs everyone else. The IRS estimates that the wealthiest 1% avoids roughly $163 billion in taxes every single year. That's not total wealth. That's just the annual gap between what they owe and what they pay. To put that number in perspective, $163 billion a year could fund free school lunches for every child in America for the next 20 years. It could double the entire budget of the Department of Veterans Affairs. It could rebuild every crumbling bridge in the country. Twice. But it doesn't go to any of that, because it stays in unrealized stock portfolios, in offshore trusts, and in tax-deferred real estate holdings. Untouched. Untaxed by design. And here's the kicker. The IRS knows, but they can't do anything about it. Between 2010 and 2021, the IRS lost over 30% of its enforcement staff. Audit rates for millionaires dropped to 0.7%. Meanwhile, audit rates for families claiming the Earned Income Tax Credit, people making under $25,000 a year, remained higher. The IRS audits poor people at a higher rate than rich people. Not because poor people cheat more, because poor people can't afford lawyers. So who cut the IRS budget? Congress. And who lobbied Congress to cut it? Follow the money. The top 25 hedge fund managers spent over $200 million on lobbying between 2010 and 2022. Not on charity, not on infrastructure, on keeping one specific loophole alive. The carried interest provision. It allows hedge fund managers to classify their income as capital gains instead of earned income. That one reclassification drops their tax rate from 37% to 20%. That single loophole saves them roughly $18 billion a year. $18 billion. Their return on that $200 million lobbying investment? Roughly 9,000%. There is no stock, no crypto, no real estate deal on earth with that kind of return. Buying politicians is the most profitable investment in America. Here's what makes this different from other rigged systems. It's not hidden. It's not secret. The tax code is publicly available. All 6,071 pages of it. Every loophole, every deduction, every exemption, right there, in black and white. But understanding it requires an army of accountants and tax attorneys, specialists who charge $500 to $2,000 an hour. A typical billionaire's tax team costs millions of dollars a year to maintain. But when that team saves you $18 billion in taxes, that's the best investment you'll ever make. You can't do this, not because you're not smart enough, Because the system was built with a moat around it. A moat made of complexity. The tax code wasn't written for you. It was written by lobbyists, passed by politicians, funded by billionaires, and maintained by an enforcement agency that was deliberately starved of resources. The pattern is always the same. Write the rules. Benefit from the rules. Pay to keep the rules. And if anyone tries to change the rules, spend whatever it takes to stop them. That's the tax loophole that only billionaires know. Not because it's classified, because no one explains it this clearly. Now you know. If this changed how you see the system, subscribe. Because this is what we do here. We follow the money. We expose the pattern. Next time, why grocery prices will never go back down. The answer is worse than you think. Ici on all, our cheers.